All right, let's jump into things. Where we at? 22nd of August, and that's it's about 10 past 10, or 9 past 10 to be exact. And just sort of getting underway with things. A couple of bits and pieces sort of happening at the moment, like sort of start off with the data. But yesterday, PMI day, right across the board. We sort of actually started with Aussie, obviously a little bit earlier, and not really anything too super flash hot and that. PMI's they don't seem to affect, like, it's not like every economy seems to be as impacted by the numbers. I mean, it's obviously the same data, but for instance, later on in the day, we had German PMI, and that absolutely just, I mean, it wasn't even sort of like a massive beat or anything. And of course, these are the ones with the 50 baseline. Positive numbers, I suppose. We got revision with the services up, and you got, the manufacturing I suppose beat a little bit there actually, and they were expecting a slowdown. So okay, I can see, particularly with this situation here, where you're expecting a slower, or a slowdown, a lower number, and not only do you not get as bad as you thought, but it actually goes in the other direction. Anyway, long story short, bang, very big impact on that. DXY was breaking out, slapped on the nose straight away from that. Actually wiped out the whole day um, of DXY's sort of gains just off this better data here. But yeah, as I said, like with Aussie, it was just like, meh, meh, okay, didn't really do anything. There's bigger forces at play with the Aussie, but that German PMI did affect the euro and in turn DXY quite significantly. Wasn't like again, it's one of those bits of data that I put things in tiers. So you've got sort of, okay, the top tier being reserved purely just for the rate decisions. So your FOMC, cash rate sort of decisions. Second tier being CPI and NFP, even though the Fed supposedly say that they look at PCE more than CPI, but I'm talking about market moving impact kind of sort of stuff, and that I find CPI is definitely a bigger impact than PCE is. But then below that, then you've got these other ones like PMIs and all those. And again, what you're doing is you're plugging it into, is it a tick in this camp or is it a tick in that camp? The camp sort of being sort of like, is it more dovish or is it more hawkish? Or in this case, less dovish, which kind of the same thing as hawkish, but whatever. But yeah, so we saw quite an impact with the German sort of PMIs and that. Euro session didn't really see a great deal in that. I actually sort of took most of it off. I'm trying to sort of not sort of just trade every single session and every sort of thing happening. So sort of cruise through here, not a great deal. I was short on gold and actually caught that nice little drop down, which I sort of put out yesterday. But of course, yeah, we saw the bounce on that. Oof, I'm actually just looking on the chart now, which I'll get to when I do the charts. But the bounce on that with gold, geez, you can see how this is just ripping people apart at the moment. But anyway, I'll get to that. So moving on, we had a bit of US data and a bit of a mixed bag of things here. We did see unemployment claims tick up for the first time in quite a while. So as you can see, it's been fairly stable. We had that spike a little while back up to around the 40s, so around June. Now remember, this is the unemployment claims that come out weekly, so it's a lot more frequent than we see with say Aussie or something like this. But yeah, so we flicked up to those sort of 40s and then slowly grinded back down, and now it's back on the rise there again. So this wasn't a particularly good thing for US dollar strength to see. Same time, you had the sort of Philly manufacturing sort of coming out. So there's two ticks sort of saying, hey, look, it's not so good for US dollar strength. So it's not backing US dollar strength with this kind of stuff here because remember, like Powell's sort of going on. They've got the dual mandate, they've got the jobs, they've got the inflation. His big thing is the inflation, and on top of that, he said, look, the Achilles heel could be if the jobs get super bad, then we may need to act on that and kind of put inflation to the back burner. So it's kind of like, with the dual mandate, it's like, yes, they're trying to balance both of them. Like, they're not just looking at one or looking at the other. But I tend to find that one will be at the forefront over the other. So, for instance, the last couple of years, inflation has been all that we've been talking about. And it's all about getting inflation down, getting inflation down, getting inflation down. CPI is a big impactors and all this kind of stuff. Then you actually sort of get the inflation down. and all of a sudden people are talking about the jobs a bit more, and that starts to hit the headlines a little bit more. And it's about sort of picking what's going to be more impactful. And at the moment, Powell, like you've got a bunch of Fed speakers, but you've got obviously Powell being the top dog with it all. You've got a couple of dissenters with that Bowman and Waller, who are saying, yeah, cut now kind of thing with it all. But really, it comes down because Powell holds the weight in this sort of thing, and he's explicitly sort of said that, what I mean, he does think inflation is going to turn up with the tariffs and all this kind of stuff. And we saw this with the PPI last week, not so much with the CPI, but of course, PPI is kind of further up the river, so to speak, sort of thing. So if the PPI is going up and we're seeing inflation there, and it's quite a strong beat, there's quite a sort of thought that, that'll just be a lagging thing to come down to CPI. Because if you're paying more, like as I covered the PPI, if you're paying more to the wholesaler, well, they're not going to absorb the costs. Most likely, they're going to pass it on to the consumer, and that's where we're going to see that inflation tick up. Anyway, so just looking at the charts, getting distracted at the same time. But so give me one sec. Cool. Yeah, so if we do see the jobs start now, this isn't a shocking number. And obviously, the unemployment claims they're weekly, so NFP is like the bigger sort of thing that people are looking at. But then you've got ADP, JOLTS, these kind of other parts as well. But again, it's just a little bit of the puzzle that you plug in there, and jobs moving in that direction. This isn't a drastic number, but it's obviously the idea, if it's moving in that direction, it kind of bolsters the idea that, hold on, wait, maybe jobs are getting bad, maybe that's the Achilles heel, maybe even if the inflation comes, that the jobs will supersede that if it gets bad enough and it's not off this, that they may need to sort of cut to sort of save the jobs side of stuff and kind of go screw you to the uh, inflation side of things, so to speak, just for the short term in that. So this is tough to do. I was seeing things, gold breaking down a bit here. I was seeing equity markets break down a little bit here as well. All right, I'll get to the charts in a moment. So yeah, anyway, that was a bit of data there. We obviously had the Philly manufacturing as well. They're expecting a slowdown in absolute poor numbers here as well. I've noticed these can be quite sort of turbulent, like, you know what I mean? That is a big miss if you look at the numbers through here. Again, not strong, not great for sort of US dollar strength, but it's not the biggest market moving bit of data. And these things are kind of sort of, we get quite wild sort of swings with these. So that was there, and then an hour later, in that we had US PMIs, and this was the bigger one. Obviously, as I said, not all PMIs act the same or react. The market reacts the same to. This did help bolster DXY. So we actually got a breakout for the short term slash medium term of depending on your time frame, DXY overnight. So we are breaking some levels. Look, we're still way below where we were off the NFP, but that can actually be quite useful as well, particularly with trading Aussie. So, Aussie's pushing at the lows, and they haven't even really started to buy US dollar across the board like they have, but they haven't even sort of regained NFP levels. So if the market starts to buy US dollar, and this is denoted by the strength of DXY, if they start to buy it all the way up there, Aussie's going to get crunched because they're not buying Aussie even on a weaker US dollar. Like, so that's how you can use Aussie sort of with the DXY as well. But I'll get to that when we get to the chart. So a little bit of stronger data there. And of course, then we had another little bit here, existing home sales. I saw this referenced as well. Again, it's not something that I'm sort of looking at and going, okay, yeah, because this is a bit of a stronger number. But again, you just put it in, you put in a tick into which camp you're actually, whether it's a hold or a hold, a bit more hawkish or dovish. Anyway, that was the news overnight. Moving through today, nothing through Asia at all, and nothing really actually happening all the way through. So that's pretty much it. I mean, we've got some Canadian retail sales, boring sort of stuff, and the big thing is Powell speaking over the weekend. So it seems to be it's a two. I'm pretty sure it's a 2 day event. Yeah, you can see here day two. So 2 day event. So yeah, that'll be the big one that people seem to be talking about. It's funny at the start of the week, they were sort of touting all this sort of stuff with what's his face, Zelensky and all that kind of stuff. And that's simmering along in the background. But come on, I mean, nobody's really, and by nobody, I mean the market, has not really cared about uh, the Ukraine war for ages. What's it going, like 3.5 years or something, 4 years? I don't know. It was good when it happened. I remember when it first happened, bought oil straight away and it rocketed. That was one of those sort of good plays. But yeah, no, it's just one of those things sort of simmering along in the background, and maybe a slight justification to cool off on some gold if they do sort of resolve things over there. As we did see, as I pointed out last week, that when they first announced that meeting with Trump and Putin, gold dumped, US dollar bought up. I mean, that was the signal, that was the sign, and yeah, reverted, but that's telling you something right there about the market's feelings towards that situation. All right. Anyway, let's jump on. So we've got the charts here. We've got DXY. As I said, it's taking out these highs that we had. So where are we? Jeez, so this is my point. This is NFP. This is where we were. What, 2 weeks ago? Start of the month. 3 weeks ago now. Start of the month, bang, absolutely smashed, and then we had ISM and yada yada, all this kind of stuff here. So we have been seeing it build back a little bit. So this is a chart that I put up yesterday saying, look, we had a bit of this ascending triangle. Yeah, there was a little bit of a sort of fake breakout over here, and I sort of covered this. I don't know if I did in the video yesterday, or if actually I didn't do the video yesterday, but or if I just did it on the charts, but. Um, the theme with this seems to be very much that one of super deep pullbacks. We've seen it sort of like if you looks a bit scrappy here with these things, but if we look at sort of the move from the lows down here, let's clean this up so I can emphasize the point a bit more. So keep that one on. Green for going up, red for going down, just to make it a little bit easier. So this is initial move off the lows, came back 61%. If we take this next one, we put it on the lows here, and there's your next leg, coming back between the 61 and the 78. So we've been seeing sort of deep corrections on each of these moves, and I've covered this a few times because I said this one here, I was like, oh look, we were going to move like this. I said we're going to move like this. Both times disappointed and came very deep down on these. I mean, even if this move from the down at the bottom here, I mean, if you look at this as a one move through here, down to the 78%. And this is the thing that's sort of like, you can sort of start to pick these things after you sort of trade, select things for long enough. Um, the way that these go, and I've said this a bunch of times that, DXY is not afraid of doing super deep pullbacks, particularly when it's at its lows. I mean, if you look at these larger sort of moves here, that'd probably be at least 60% off this one. Yeah, past the 61%. If we sort of look, a bit messy here, but we drag this one up here, 78%. So you can see that sort of like, even with the larger moves, it's coming back 78% of them all. If we get back into these lower areas, we can see deep correction, deep correction. So that to me is sort of telling you that, you're still dealing with incredibly sour sentiment over DXY, but as much as they're sort of like trying to push this thing down, on a higher time frame, this is actually putting in higher lows. And we've seen this a couple of times now, and technically higher highs as well. So I wouldn't count sort of DXY out now. Certainly, like if we get something incredibly dovish from uh, Powell over the weekend, which I don't think we're going to get, we could see this thing sort of backing its box down over here. But I think certainly this is a bit of an indicator that we're seeing that sort of like coming into this week, coming into this weekend, the market's definitely trying to sort of hedge itself a little bit, expecting him probably to sort of come out and say, hey, look, economic data's not too bad. Yeah, jobs are a little bit sort of iffy, but I've been telling you guys for ages that we've been sort of considering oops, that we've been sort of considering the idea that inflation is coming, PPI's come in hotter. You know what I mean? I think it's going to have more of a hawkish tone, and I think he's going to go screw you to sort of Trump or any of these ideas that uh, they want to sort of cut by 100 base points or whatever sort of stupid thing um, they're sort of proposing there. So I think this is sort of the market telling us something here. That at least for the time being, they're kind of not counting it out. We got high lows and that on the higher time frames. We've seen it sort of do its little smaller or medium term kind of breakouts, of back above or testing above these highs from back sort of in August. So you can see that this is actually, if we drag this one down here, you can see a little bit of a zone through here. The market. So actually get off the 4 hours. It's hard to sort of do this on a low on here. Yeah, a little bit of a sort of a zone through here. Resistance, support, try to hold above, try to hold above, and then obviously gave way, became the resistance again. We're back here testing it, and it's a resistance again. So yeah, I think this is the sort of trigger level for us to sort of say, hey, look, this thing's going to go a bit higher. So I'll put the alert just above that. And this is the thing, it's just about sort of building the charts out daily. I mean, it's a lot of the stuff is repeat kind of that stuff, and it's a lot of it is let down with DXY. Um, just breaking higher. A lot of it is let down with DXY. But we can see that the market, for whatever reason, has valued it. And look, if we drag this back over here as well a little bit, it's probably a little bit choppy here. I don't like to have the zones too wide because it's like, well, I mean, unless it's a higher time frame thing, like these sort of chunky ones here. But using an intraday session and then sort of um, having like sort of like 20 points or whatever. It's just a bit stupid. It's not really usable. But in the short term, I wouldn't mind this being a little bit of a zone through here. We could say, okay, where would it be a little bit above? I'd disregard this one here. Maybe actually what I'd do, I'd build these out here. So these are just potential short-term sort of targets that we could see where we've seen markets sort of knock itself back a couple of times. So it's certainly going to have a little bit of sort of work cut out for itself. So when you're sort of matching these charts up as well, you can see that because it was quite choppy over here on the way down, this is after NFP, just before ISM, quite choppy down here, you generally see these things replicated on the way back up, meaning that unless you have a big sort of data event, you're going to see, as you can see, this thing move quite smooth down here, move quite smooth back up here, quite smoothly up here, move back quite smoothly. But because this is a bit of a sort of chop zone over here, I'd imagine probably something fairly similar should we get up to these levels over here. Meaning that sort of like, these are the kind of levels that we could see, even if a little bit of a breakout, it could be slapped on the head. And then maybe it could have a second effort and go to the highs or so. But I imagine this to be sort of replicated over here. I wouldn't imagine this to just chop straight through here. Unless you had some sort of big bit of data or headline or something like this that could really impact that. And headline, I don't think could even do that because a headline will get a knee-jerk reaction, but data is what lays the foundation for what I call landscape changing. And there's only certain parts of data that'll do that. The top tier ones, mainly the rate decisions, but I mean, obviously with all this tariff stuff, a little bit of that can impact things as well, as we saw with copper. But certainly it's on the charge here at the moment. The fact that it's sort of got this nice big push up here, we got that strong economic data, and this is the thing that I've been saying for a little bit now. Obviously to my own sort of detriment in that, but the market is going to start to get a couple of, this is my belief anyway, that the market will start to get a couple of bits of US data back to back, like we saw with the PMIs, and then if we say we do that at the same time, have a little bit of a hawkish pow, or less dovish pow, the market will go, hold on, wait, maybe we've sort of sort of sold this down a little bit too much. And maybe actually, a fair value may be up around 100, 101, 102. Maybe we've sort of cooked it a little bit too long with this massive sell down here. And I think that's going to rattle things a little bit. I think that's going to sort of put pressure on metals. I think it's going to put pressure on equity markets, and it's going to put pressure on Aussie dollar, which are basically the main things that obviously I trade. And we're going to see yuan weaken a little bit more there as well. So I am still looking for more US dollar strength. Coming into this weekend, I'm going to try and keep it fairly flat, just for the fact that I think there's a lot of uncertainty. I think obviously the market is obviously trying to buy up US dollar here, but we're coming into some pretty choppy sort of zones here. A lot of the price action has been back and forth and back and forth. Gold, Aussie, these kind of things have been very choppy the last couple of sessions, or particularly yesterday. Aussie's right down on its lows, which I'll jump onto in a second. So it's not really the time to go, hey, let's bet the farm on this one. I would say, look, potential is more for upside here, but as we've seen, deep corrections time and time again. It's coming into this sort of higher time frame sort of zone here. It is attempting to push through. If this alert goes off and we break higher, that's great. We've got some little short-term targets where we can buy these things up to. But I imagine a little bit of risk off hedging into the weekend as the market sort of pretty much sort of seems to be sort of pricing the idea that Powell's going to go stuff you and hold off on cuts come September. All right, let's move on. We've got Aussie. Aussies played very nice here. I've got these two were the main targets. I sort of actually added this in because I thought this little channel kind of lined up quite nice and gave us a little sort of nice sort of lower target area that we could potentially be seeing on a break. We didn't get the break, or not yet anyway. But a couple of things to unpack with this one here. These are the two targets we said underneath, well, I said underneath 80, that we were going to sort of see a drop down 50 and 20 with the targets. We dropped straight to 50, 30-point move, that's fine. And it's grinded down and then sort of just been just like a slow sort of someone hitting the brakes and sort of like holding it into this low down over here. So if we drag this through here, we've only had two touches up here, only two touches here. So it's not a fully confirmed sort of channel, and it's obviously dancing in the middle of this thing here. But to me, as I said, I think we're going to get some US dollar. I think we're going to get some more risk off. I think if Aussie short moves up to these levels over here, which I'll put a little alert on this. So it's channel falling resistance there. Like, I could see this sort of like at least having an attempt up over to these sort of levels here. But if I get a shot to sort of sell at these levels over here, I'm going to sort of sell into it. As I said, I think we're going to see some more US dollar strength. I think this is the thing. Obviously, Aussie is not part of DXY, which I've sort of covered numerous times with it all. But as I said, this is NFP point for Aussie. It's gone up, it's gone back down. That's fine. So the market's obviously in this relationship selling Aussie dollar, buying US dollar in this particular relationship. You see this because it's back down at those levels. Now, DXY as a whole, as I said, this is against the other majors. It's only sort of got how far back up here? 38%. So it could still very much go and roll down over here. We know this. However, if the market starts to buy US dollar against the euro, against the pound, against the yen, the Canadian dollar, all the things that make up DXY, is Aussie going to be avoided from that? Like, is it going to be sort of excluded from that sort of position or that move? I would say definitely not. Because the thing is, they're already buying US dollars. So, like, let's buy US dollar, let's sell Aussie. That's great. The market then goes, hey, you know what? US dollar's undervalued against all these majors. Why are they going to go, hey, actually, you know what? But it's undervalued against majors, but all of a sudden now we love Aussie. Look, they're already selling Aussie. So if they start to buy US dollar against the other majors, and of course this requires a bit more buying and sort of breakout from US dollar, but if they start buying US dollar against all the other majors, and they're already buying it against the Aussie or selling the Aussie against the US, what is going to happen to the Aussie? Aussie is going to get crushed. So I think very much the risk is more for the downside. I've got targets down in sort of 62s, 62.50. These are more sort of medium term targets, but I would say over the next month or so, 2 months, particularly if we do see that sort of push and revalue of DXY back up above 100, 101, I think that's going to push Aussie down. Yeah, 62s, I reckon we will see over the next couple of months and that. So anyway, that's a further look. I think in the short term, any rally up, I think could be pushed back down. It is, look, it's grinding into this little low here. You got this little sort of push up on the RSI. This is on the 4 hour. It's certainly holding this level here. Tested underneath, as you can see yesterday, and there wasn't any sort of like pool of stops. So I think sometimes when you see these kind of moves, and this is a fairly strong area, obviously we were coming down, NFP, bang, came back to life. Once you sort of come down here, tests underneath, if this doesn't just go and then drop down and see a candle like this, then you can think that, okay, they're testing for stops, there's no stops. Push up, test, no stops. Push up, boom, boom, boom. I actually got out of a couple of good shorts around 16 or something last night. Where are we? Yeah, close to 17 last night, 64.17, just for the fact that we'd sort of come down and time again. Look at this. This is on a lower time frame. This is the chop that we're dealing with down here. And this is what I'm saying. This is basically summing up the market at the moment, because things aren't just sort of nice, clean cut runs. They're up, down, up, down, up, down, up, down, which is great for sort of in-out trading, particularly if you sort of have that one theme. But as I said, we're coming into supports now. It's always risky business to sort of short something into support or buy something into resistance. So I think a better option for this is to see some sort of attempted push up on Aussie to then be met by some sort of selling, in which we can get a better level to sort of sell down. One thing with Aussie here is it's still, even though it's trying to grind, it's still putting in lower lows. So if it sees a bit of a push, maybe up around 50, that'd be a decent area to sort of short it down from. And obviously underneath, excuse me, 14, I think you're moving down into the 90s. Targeting 90s, I sort of say, because, I mean, of course, we've got a little zone through here, potential of what would be the lower end. Well, this is down into the 70s, this kind of area over here. But, 90s, I cover this all the time. It's a reoccurring number that the market holds with Aussie. So if you want to get a long position, 90s is a good shot, because even if it overshoots, generally you're going to get a reaction and it's going to at least tempt up there. And you're going to get 10 or 20, 30 points, 50 points. It could be anything. You got to play that by year at the time. But the point is that sort of 90s is generally an area. So a breakdown here, I think we're probably at the end of this little move through here. So any sort of drop down here into that, I'd probably maybe look for a quick short down under here, but I wouldn't be holding a great deal of shorts into 90, because around this area, I'd expect a bigger kind of sort of correction with it there as well. Just watching ASX and that's get crunched above 9K. See if we can take out those swings from overnight. All right, move along. We got gold, and this was the play yesterday. So gold is, look, this correction here was a lot bigger than I kind of thought it would have been. Like, as you can see, this was a very much bounce up here. But, the thing is, it's respecting the chart. This is a confluence. So we've got this sort of rising support through here. We've got this horizontal. The market said, yep. So I called sort of a 33.10 for this short down through here, and we were going to see a reaction. What do we get to? We got to 33.11, so within $1 of that one. And obviously it's bounced up. I thought we may have held here. It looked like it was trying to hold at this 50 and then just cruised up, bang, and now it's back up testing this higher time frame zone. But as you can see, market's doing its business and the sellers are holding firm here. So let's move these sellers up, bang. They're holding the line across the line here. So it means that basically, look, this is your trigger point if it's going to go higher. I don't think this is going to happen, but it's just, you need to cover both sides of things. So just put a push higher. I don't think it's a confirm it's going higher. Yes, you're going to run into some wicks in that over here. Probably a safer bet would be above 60, to be honest, actually. Let's go back. Put that at 60. So above these, like, you may sort of get something above here, but of course you're running into these wicks. So there's a good chance you pop up here and then close. Maybe a close above 52, but certainly pushing above 60. Okay, well, whoops. and then you've got something moving on over there. But I think sort of the momentum's definitely still coming down here. Yes, the rally came up here and took out any sort of textbook stops over here, but as you can see, market very happily sold it down here yesterday as well. This is one that I sort of covered on a different chart, but this was the move that we had sort of coming through here, and bang. And I got out about sort of 27 or something. This is the point with this at the moment, and I've chopped and changed my styles over the time and that, and everybody trades their own styles. My style is in and out, in and out, in and out. So I saw this big drop down here, and that I was actually just leaving dinner, actually driving at the time. But the point is, it dropped down here, smashed down to these lows. This is a 61%, this level here. If you drag these lows from here to here, and as you can see, 61%, beautiful little area. And I went from 30, I set a TP set at 30 and then manually closed at 26 and 27. So very much caught this sort of move back down here beautifully. And, had you sort of done this, hold on, like, I've got my, even if you got an entry here, but say you got an entry here, because there was a little sort of break, there was a little line through here that we had yesterday. Break, retest, even if you've got sort of in entries here and hey, look at me, I'm going well, like 43 down a thing, you got 20 bucks, I'm 20 bucks in the thing. What happens to you? Boom, you get stopped out. Bang, game over. You made nothing. Like, you know what I mean? Each their own with their style, but I just find that, going in and out, in and out, in and out definitely pays a lot better, particularly with this kind of price action that we're seeing at the moment. It's very difficult unless you're blindly kind of counter trading. Like, as in, the only entries that aren't getting stopped out are the ones where textbook you're not doing well. You know what I mean? If this thing breaks the supports down here and you long it, you buy it, well, okay, you've done okay. Boom, gone up here. But, you shouldn't be sort of necessary breaks lower, so let's buy. You're doing a counter to what the textbook or what the sort of technicals are telling you. Likewise up here, it breaks a higher. Okay, yeah, we bought it. No, boom, back down. So these people, everybody's getting chopped out, chopped out, chopped out. And then the same sort of thing over here. I mean, if you bought it off support, okay, that's good. But that's what the textbook says you should do, buy it off support. Not sort of like, okay, it comes down here, breaks lower, and then goes up. And this is my point, that sort of like, if you're trading this little move through here, you sort of shorted here, you put your stop here, you trail, you stopped above the highs, you've covered a couple of sort of pushback swings, that's great. Got the big move down here, and then bang, you stopped out, and you made nothing, or you made portion of what you sort of were percentage wise at that time. Anyway, look, that's a bit of a rant, but that's just mainly just re-emphasizing the stuff for myself. But if we have a look at sort of where we're at now, sort of, as I said, I actually added back in at 45, I think it was last night. I got out at 38 or something, 37 this morning. I was looking for 35. Actually, sort of caught this point here. It's funny, sort of in one candle, I'm like, oh, this isn't too bad. Chop back up, chop, 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 chop. Okay, stops back to even. Went to bed, TP 35, came down, woke up, it was like 38, 39, dropped down to 37. So where are we? 37 just here. And I got out, and yeah, we'll see how we go now. But as you can see, it's dribbling back down this way here, but it can very easily just pop back up over here at the moment. So even in the short term, this is a very tough area to sort of be trading in that. As I said, it's really just eyes on DXY at the moment. Gold's a funny one in this instance because I think at its heart, gold is risk off, as we've sort of seen. Um, Risk off. It's sort of at its heart is because of we saw this with the tariffs. But I think if you unpack that a bit more, it's not so much that it's risk off. It's just like people aren't scared; they're just unsure, and I think that's different. I think sort of like people are sort of like unsure about the tariffs. So yeah, I guess they're worried, but it's a different kind of thing to like when war or something breaks out. I don't know, I may not explain this the best with it all, but the thing is, it's sort of like equity markets for the most part are still doing quite well. They're coming off a little bit this morning, which is fine. But, I think it's sort of like coming into the weekend, yeah, it'll be kind of risk off. But if it were truly a risk off play, and people were sort of like, like sort of like worried about it, they'd be buying gold up. But as you can see, even with that, even with US dollar sort of breaking out, it's not breaking down. Even with sort of US dollar sort of very weak in that, you know, it's still struggling to find buyers. So I still think the sort of the move is for the downside. Um, but at the same time, it doesn't mean it can't sort of just range this area through here. Sort of, I would say, sort of like, as I said, above 60, maybe you got something going on, but I don't expect that to happen. And then moving down, as you can see, it's testing lower, finds buyers and all this kind of stuff. So maybe we could sort of draw just a little sort of move of what's happening with these guys here. That to me doesn't really give anything. You know, I think, okay, so what we can do, just for the sake of having something on the board, that seems to be your little range there. So I'm probably going to remain fairly light with gold, but a close under 35, close above 42, I think is going to give you your little areas, your little directions, and I think the trade's probably better for the downside. I think that's potentially what you're kind of looking at. So I think a close underneath 35, looking down for maybe, geez, it's only down to 28. So this is really slim pickings here. Obviously, if you take out the low, take out the 24, well, that's a bit more significant. But 24 and 60 are kind of your areas where you're going to see more sort of a confirmed direction, because that's either move one, move two, move three, or it's going to have sort of like, you know, I mean, failed. We've got a lower high coming in here now, and that'll give you a lower high plus then a lower low if you take out these lows under 24, and then we're looking back down at 31, 31.10 or 33.10 again. So I think it's definitely going to dribble down a little bit more, but I think it's going to be a chop fest on the way down. Cool. We've got silver. Silver very much sort of came back to life. I've said a couple of times I've been sort of clear of silver for a while, and this kind of move here, Jesus, silver's really sort of picking up a lot on this actually, to tell you the truth. So yeah, I thought we were down here. I mean, it looked like beautifully coming down, dribble, 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 and then I thought we was definitely going to come down around this 36.40, and bang, sprung back into life. That's found sellers kind of on cue where we had that zone, and it has sort of like stopped and grinded around there a little bit more. So we'll see how we go with this one, but for me, it's just an absolute mess. I mean, you got lower highs, higher lows. Let's drag these out now. Let's say this. Borrow that line from there. Borrow that line from there. Bigger triangle. I mean, this is what I mean. It's sort of like levels, but it's triangles. Triangle breaks down, comes up here, retests the underside, but then sort of springboards back up over here. It's a mess at the moment. It's an absolute mess. Still think a breakdown there would be the go, but no, for me, I'm happy to sort of steer clear of this one for now. And copper, so copper sort of broke through that little channel. We can drag this sort of falling resistance back through here. Seems to maybe be providing a little bit of a sort of level to be coming back from over here. Um, yeah, look, there's not a lot to sort of say with copper here. We sort of saw a little bit of a horizontal come into play, I suppose. Drag this across over through here. I think this would give you a decent little sort of downside move target if you got down underneath here. That would be the play. I don't think we're going to get anything major at this point, if anything, direction. I think a sort of rejection from down here, break underneath 447, look for sort of 415. Small, slim pickings, and this is what I'm saying at the moment. Like, there's no point going too hard into this weekend when, you know, I mean, look, it's a 1% move kind of down through here, you know, give or take. But, you know, in terms of copper, that's not a massive move. You know, copper can do 3 or 4% or something, and it's not like, wow, super drastic. It's just been in absolute grind mode through here. Even sort of any move up, I've said a couple of times, any move up higher, I imagine just gets sold into. I do think this has probably got more of a risk for a downside move. I'm interested at sort of what happens at these two levels here at 441 and 437, that area there, because I think that's going to be significant. We got the target set up underneath that as well, but for the time being, just grind city. And just on grind city, the king of the grind, the yuan. And as I can say, it's just really just respecting the range. Bang, back down here, moves up to the top, gets sold down. Had an ugly little sell down yesterday on the start of the day. It's funny when you look this, you really need to look at 4 hour minimum on the time frame of this because it doesn't really move. But we did see this big sell down here yesterday. I couldn't see anything 100% attributed to it. They did sort of say like so with the one the PBOC they set the sort of fixing price per day because in theory it can only move. It never does this, but in theory it can only move 2% a day, which is a big move. Like, for any currency, 2%, you're like, well, this thing's getting smashed or it's flying. Like, 2%'s not small. But the point is that if you put your fixing down here, this is just picking out numbers, well, that means that you can trade between here, whoops, and here, for instance. But of course, if you move your fixing down here, well, that 2% range obviously drops that down, but it drops down the top end movement as well. So basically, if you see them saying, hey, look, we're making a stronger fixing for the day, well, that's going to put pressure on it because the theoretical area in which it can sort of trade around or trade between is lower. So they're saying, hey, look, we want a stronger one here, and we're sort of pricing that for it all. It's a little bit different with the PBO, how the PBO say. Like all these currencies, they sort of play a little bit different to each other. We've got they're all similar, but have sort of different sets of rules and this kind of stuff as well. But that's just one for the PBOC here. But saw an ugly little sell down, but clipped into an area pretty much exactly where we sort of feel it to be. Let's get on the higher time frame at least. An area that we've marked out, number of times. We know that they come down here, they've got to buy it up. Come down here, they've got to sell it down. That's our direction. The break and close outside these ones here. I effortlessly have been, well, not really effortlessly, but I've consistently been holding the torch for this to break through 720. We got that little test, and then obviously bang straight back in its box. But we'll see what happens with this here. But again, 720 the key for the sort of breakout a little bit higher. All right, that's it from me.